Hello, and this time on the Mortgage and Protection Podcast, we have the return of Paul Holland from Henchurch Lane for part 4 of our self-employed mortgages series. Great to chat with you again, Paul. How's it all going?
Very well, Tessa. How are you this morning?
Good. Yes, I'm good too. Thank you. It looks like the sun is shining through the window, so that's good.
Yes, indeed. Indeed. And we're stuck in the office, which is always nice.
I know, but it's
Although it
very
is freezing
cold.
out there, it's not actually that warm, is it? It just looks nice.
It does just look nice. We are recording this on a cold day in November 2023. So let's dive straight into these questions then. We've covered quite a few questions already, but we've got 3 questions here that we're going to focus on this episode. So first of all, then, what percentage of a property price can a self-employed person borrow?
Okay, so a self-employed person can borrow up to 95% on a conventional property purchase. So they're going to need a deposit of at least 5% to bridge the gap. So for argument's sake, if a property is £300,000, they're going to need to put a cash deposit down of £15,000, which means they would need a mortgage of £285,000. A little bit of quick maths there for you on a Monday morning. It's definitely not Monday, is it?
No, we're on Tuesday.
Tuesday morning. So
Feels
yeah,
like a
they'll
Monday.
need 5% at least on a conventional purchase. So there are other deals and schemes out there that we could potentially cover on another podcast that would be slightly outside of those parameters. But for this case, we'll focus on the conventional. Now, there's lots of other factors that, of course, could result in that 95% option being decreased to a smaller percentage, but being self-employed in isolation isn't one. So 3 things to bear in mind that could impact the chances of achieving that 95% on a mortgage would be credit history, mortgage rates, and affordability. So just touching on those, credit history, if you've got a less than perfect credit history, then some lenders could choose to reduce the maximum loan to value that you can borrow as a result of your imperfect credit. Okay, so maybe they would offer you a maximum of 85%. Therefore, the minimum deposit you'd need would obviously be 15. Mortgage rates. So mortgage rates are obviously being a little bit higher than what we're used to recently. So if that results in that loan size that you're getting being unaffordable for you from a budget perspective, then of course you would have to reduce that. And then lastly, the affordability, which would be the 95% amount. So let's say, use that example of £285,000. If your income doesn't quite stretch from an affordability perspective on the calculator to get you to that maximum loan, then of course you're going to need to reduce the loan amount. So yes, as mentioned earlier on, there are schemes that would be worth entertaining if the deposit is your restricting factor. Maybe we could cover them on a later podcast, Tessa. But one of them in particular worth noting is something called a family springboard mortgage. I'll throw this out there now because it's probably the most common that I've come across that would allow you to effectively purchase a property with no deposit. So in essence, you can borrow up to 100% of the property, but someone you know needs to put 10% of their own savings into a savings account, and they don't get that back for 5 years. Okay, so when they do get it back, it comes with interest and all that good stuff, but it's locked away for 5 years. So if you have someone close to you with a lump sum that they're willing to effectively lend to you rather than gift to you, so they want it back, then it could be something worth looking at. And like I said, we might touch on that at a later date.
Right. Okay. So really interesting there, and 3 important key points to take away from the episode as well. So moving on then, the next question here asks, how does someone prove their income if they are self-employed and working contracts?
Okay, so firstly and most importantly, any contractors will need to be keeping detailed and organised financial accounts and contract information at all times. So preparation in this instance really is key. So having past and current and future contract details to hand is going to make that mortgage process a lot smoother for you. So document collation really being the key there. A lender will want some degree of history for contracts, as well as a degree of proof from a sustainability point of view. So make sure you're going to have all of your current, past and future contracts to hand. If you're a limited company, if you set up a limited company as a contractor, then make sure you've kept your company accounts or you've got easy access to those as well. Any HMRC documentation that's produced off the back of your income being declared. So things like SA 302s, tax year overviews. And if you're part of an umbrella company, which can be the case sometimes for contractors, then you would likely have, pay slips via that company as well. So keep all of those to hand. So any documentation, make sure you've got easy access to that. And it's just going to make that whole process a little bit easier for you.
Okay. And I know we've said it before, I'm going to say it again. I think, preparation is key there when it comes to documents. Okay. And just lastly then, can someone with no proof of income get a self-employed mortgage? So that's interesting.
Yeah, it's a tough question. It depends on how it's being asked, really. So if it's being asked in a sense that Mr. Smith, who hasn't submitted a set of accounts and is looking to get a mortgage by himself and he's got no other income, then ultimately the answer is no. So you're going to need at least one set of accounts that have been submitted to HMRC as a self-employed person or business before any lenders can offer you a mortgage, if that's the only income on the application. But if the question was, have we successfully arranged a mortgage where there was a self-employed applicant on the application with no proof of income, a slightly more long-winded version of that, but we could answer yes to that. And ways that we would have successfully achieved that would be ways like having another applicant on the application. So if you've got Mr. and Mrs., Mr. is self-employed with no income proof, essentially, that Mrs. has, then we can still go down that route. So the self-employed person not having the evidence or self-employed income, but proof of other income can also help. So things like pensions, investments, or even employed income. So some people that are self-employed have got a part-time employed gig on the side as well. So, any income proof that we can provide towards the application is going to be helpful. A buy-to-let application would be another way. So there are lenders out there who offer loans or mortgages for people with no income at all, but on a buy-to-let basis, because the rental income from that subject property is going to be what drives the maximum loan. So if it's a buy-to-let application, again, you can achieve that with some lenders with no income. But as you can see, whether it's rental income or income from someone else or another source of income, the common denominator here is income to reach affordability. So if you're going to fall into that small bracket of people who are self-employed, but haven't been self-employed for 12 months yet, and that's the only income you've got, you're going to struggle to secure a mortgage, I'm afraid.
Okay, so something to bear in mind there. There are options, but it really does depend on the personal circumstances there and all the factors involved. So they're all the questions that we are covering on this episode. We will be back. I think we've got another 3 episodes to cover with quite a few more questions, haven't we? But there we go. Hopefully that's proved helpful. And Paul, we'll catch you on the next episode.
Thank you very much. See you soon, guys.